profit and loss account is not called by its name, it is called income statement. Okay, that is the first change to be seen. Income statement. Don't use the word profit and loss account. The meaning is the same though. Starting on top, as I told you, all incomes on top. So you will have sales. That is your only income. Okay, your business income from which you earn revenue. Sales. Sales return, you have to minus that you also did in trading account. Purchase return and sales return have to be deducted respectively from purchases and sales. So that is your income over. Then starts all your expenditure. Firstly, all direct expenses known as cost of goods sold. To sell your goods, what was the direct expenditure required for manufacturing, for producing? They are as follows, starting with opening stock, purchases, wages, carriage inward, all other direct expenses. These are your debit side of trading account. But there is one item, closing stock, which comes generally on the credit side, but you have bought it on the debit side. So the operation to be done is less. That is specifically you have to remember. Closing stock, you have to minus, and you get your cost of goods sold. From sales, you minus cost of goods sold and you get gross profit. From trading account, your final answer is gross profit, and that's the formula given there. Net sales minus cost of goods sold. Okay. Then moving further, all other expenses required to run your business, they are known as operating expenses. Now, this is nothing to do with production of goods. This is all other expenses that is going on in the office of that organization. What happened in the factory, that is over on top, or actually on the shop floor where production goes on. But there must be also an office where accountants are sitting, other managers are sitting. To run that, what all expenses are required is all under operating expense, classified into three types. Administrative expense, day to day, electricity, salaries of the staff, okay, insurance paid for the office, all of that, repairs and maintenance, everything will come under administrative expenses. Then finance expenses are those expenses required in case you have borrowed money and you have to pay interest, will all come under finance expenses. And finally, selling expenses, all expenses relating to sale of goods will come under selling expense. You will have your total operating expense, which is nothing but the debit side of profit and loss account, minus from gross profit, and what you get is net profit. But before that, they have given you 2-3 other things which right now we will not discuss. Like if you see here, non-operating income and non-operating expense. As of now, I don't want to discuss that. When the time comes, we will understand better. So leave that. Directly what you get is net profit. Okay, and that's what we are going to prepare today. So immediately what we will do is take up a question and see how to convert the existing profit and loss account into an income statement. From horizontal, you are going to be preparing a vertical format. So format remains the same. How you prepared for balance sheet, same thing you are going to be doing. 2 columns will be required. Okay, particulars, rupees and rupees, that is the inner column and outer column. So draw this for about 10 to 12 lines. That should be sufficient. Draw and then we all continue together. Okay, so have a look, see what is given here. Convert the following trading and profit and loss account into vertical income statement. They have given you on the debit side, if you have a look, opening stock, purchases, wages, and gross profit. Credit side, 2 items, sales and closing stock. Trading account is over. Below that, in profit and loss account debit side, office expense, selling expense and finance expense. Finally, net profit. And credit side is nothing but your gross profit brought down from the trading account. That's it. From this information, they're asking you to convert and prepare vertical income statement. So let's prepare now. In the format on top, you write down income statement for the period. They have given you the date here, so let's write income statement for the period ended 31st March 2019. If you see the blank format of balance sheet and P&L, that remains the same. Only the items inside have to be written in a particular way. All incomes on top, all expenses below. Okay, let's write. You have right on top sales. Have a look in the trading account and see sales given to you is 11 lakhs. So write down. There is no sales return, so you can directly put it in the outer column. Sales 11 lakhs. Then from your income, firstly deduct all expenses that are directly relating to production of goods. That is known as cost of goods sold. So from here, you write less. Cost of goods sold. Now, what all comes under cost of goods sold? We will make a list below this, one below the other, and write all amounts in the inner column. For the first few problems, if you want, you can take help of the blank format printed and given to you in the textbook. You can use that format. Okay. So cost of goods sold, starting with the debit side of the trading account, take all items there. The first one is opening stock. So write down opening stock, inner column. The amount is 3,50,000. Then next is purchases. Continue writing below that. Purchases 7 lakhs. One more expense is there, and that is wages. Right, wages. Amount is 50,000. And you are going to have closing stock, which is on the other side. Okay, bring it to this side by putting a minus sign. So write minus closing stock. Closing stock in the credit, that is 2 lakhs. And if you remember in the previous lecture, I told you any negative figure always indicate by putting it into a bracket. That's it. You have taken all items of trading account, take it in the outer column, add up. There are 3 items to add, 1 item to subtract. So just add up and tell me how much that is. 10, 11, and 2. Is it 9 lakhs?
Yes, sir.
9 lakhs in the outer column. That's it. You are ready to calculate gross profit. Sales minus cost of goods sold will give you gross profit. Take the total and call it gross profit. 11 lakhs minus 9 lakhs. Your gross profit is 2 lakhs. And if you compare and see, even in the question, gross profit was already calculated and given to you. That also comes to 2 lakhs. So nothing, you have just copied the trading account, but in a slightly different way. Income on top and all expenses below. And of course, closing stock specifically, remember, you are taking it to the other side. That's why the sign changes, minus closing stock. Okay. Now trading account is done. We have to calculate finally net profit. So you have to take all those items which are now on the debit side of profit and loss account. They are known as operating expenses. From gross profit, you are going to deduct. So right, less operating expenses. Okay, and operating expenses are classified into 3 types. One is your administrative expense, one is your finance expense, and one is selling expense. So if you go back to the question, have a look. Office expense means all those are relating to administration. They come under admin. And then the other 2, as it is, you are going to write selling and finance. So basically just copy as it is what is given. The first one, administration expense. You can use the short form admin expenses. That is 1 lakh rupees. You're making a list, so put it in the inner column. This is all under operating expenses. Then the next given is selling expenses. Again, inner column, 50,000. And finally, finance expenses, 20,000. Below that, you write down finance expense, 20,000. And that is all of your operating expenses written one below the other. Take the total and put it in the outer column. Add up and tell me how much that is. 1,70,000. Okay. Now finally, you have all the information to calculate net profit, which is your gross profit minus operating expenses. So 2 lakhs minus 1,70,000, 30,000 is net profit. And if you compare and see, even in the question, net profit was 30,000. So only the presentation of the items changes slightly, but answers are going to remain the same. Your gross profit is matching and your net profit is matching. The only reason it is put in the vertical format is because later, okay, when you are going to actually do the analysis, which is the name of the chapter, okay, you are going to do a detailed study. That time this format is more useful than the previous one. Okay, we're going to see how that is done. Okay. Now I will ask you, is there any doubt in income statement, which is nothing but profit and loss account in the vertical format? Have a look, and any item, okay, where you require more explanation, you tell me, I will explain again. Now we are moving towards the next part of the chapter, wherein slowly your analysis is going to begin. That is getting more useful information out of your financial statements. Now, as an investor or as the owner of the business, okay, you want to know, is your organization doing well or not? Okay, so you need certain information from your books of accounts, from your financial statements, to know whether you have been doing well. This year, have you done better than the previous year? Okay, because every year generally your expectation is to grow your business. Okay, so have you done that? Have you achieved your targets? Okay, to do that, one simple comparison is compare last year's figures with your current year figures and see whether you have improved. Okay, and that is known as creating a comparative financial statement. Okay, comparative financial statement means prepare two balance sheets together or two profit and loss accounts together and compare and see last year what was the result versus this year what is the result, and then automatically you will know whether you have done better or not. Okay, for example, okay, I will tell you, this is your balance sheet. Okay, the old format. Okay, I'm drawing the old, not the new one. You have all liabilities listed one below the other as well as assets. For example, let's just take assets. Okay, land and building is one item. Last year, that is, let's say 2019 and 2020, you are comparing 2 years and you want to know what change occurred from the previous year. In 2019, you had land and building worth 5 lakh rupees. And in 2020, that has become 7 lakh rupees, which means you have added or purchased some more land and building, your asset has increased. Now, while comparing, okay, you need to show everything in terms of percentages and figures. Okay, how much was the increase, how much percent it has increased. So to do that, okay, there are certain simple formulas. But before we get to that, if I ask you what is the change, how much addition took place, it's very simple. Whatever is the current year, that is 2020, 7 lakhs, minus whatever was there last year, that is your previous year, 2019. If you want to know the addition, that is 2 lakhs. How did you get that 2 lakhs? Whatever is the current year figure minus the previous year figure, you get 2 lakh rupees was the addition, increase in asset, increase in land and building. Okay, this was in terms of number, that is amount. But if I ask you how much percentage has increased, I want in percentage terms, then how will you calculate? Can anybody tell me how much percent it has increased? From 5 lakhs, it has moved to 7 lakhs. How much percent it has increased? Anybody can tell me. Come to page 376 and question number 1. Now remember, you require last class's discussion, okay, where we had the balance sheet prepared in the vertical format. That remains the same, except one addition is there. If you see here, there are 2 years given to you, 2018 and 2019. See what the question says. From the balance sheet of Amar Traders as on 31st March 2018 and 31st March 2019, prepare a comparative balance sheet. Comparative means compare 2 years put together, the last year and the current year. Now, what tools you are required to prepare the balance sheet, that remains the same. Okay, in the vertical format, liabilities on top, assets below. That we will prepare as it is, but except that you are going to require 2 columns this time, one for 2018 and one for 2019. So same way, prepare particulars and 2 amount columns, and then we go ahead. Come on, start drawing. Particulars, 1 year 2018 and 1 year 2019. 2 amount columns required. So Roman number 1, in your particulars column, write down 1, sources of funds. Only 2 sources. One is the owner's funds and one is borrowed funds. So write down A, owner's funds, owner's funds itself has 2 parts. Okay, one is the capital given by him. So below that write A, small a, capital, and then there will be reserves and surplus, which is all the profits that he has earned over the years. So B, reserves and surplus. These 2 items are going to come under owner's funds. So let's write the amount also. Capital, have a look. In 2018, capital is 60,000, right in 2018 column, 60. And in 19, it is 72,000. Then the next is reserves and surplus. Copy for 2018, 24,000, and for 2019, 30,000. Those last 2 columns which are there, okay, that also quickly we will calculate as we are going further. Okay. Firstly, absolute change, which means change in amount. Tell me, capital, has it increased or decreased? Have a look and tell me. From 60, it has become 72. Capital has increased, but by how much? Calculate and tell me. In amount, how much it has changed?
12,000.
12,000, right? In absolute change column, 12,000. Also, we need to calculate how much it has changed in terms of percentage. So I will show you the rough working year. You can do it at the side. Don't do it in the main statement. Current year formula to be used. Current year minus previous year divided by previous year into 100 to get a percentage. That is current year 72,000 minus previous year 60 divided by the previous year 60. Change upon initial, if you want to remember it that way, into 100. So carefully calculate how much that is. 12,000 divided by 60,000 into 100.
%5.
Just check how much that is. 12,000 divided by 60,000 into 100.
20%.
20%.
20%.
20% is correct. 20%. Do this calculation at the side, okay? Whatever I'm showing you. 72 minus 60, that is 12,000. Divided by 60,000 into 100, and that is 20%. Okay. Same thing do for reserves and surplus. That also is increasing. Firstly, tell me how much it has increased in amount. $24 and 30. It has increased by 6,000. Calculate in terms of percentage and tell me. 30 minus 24 divided by 24 into 100. Change upon initial. 30 minus 24, that is 6,000. Divided by 24,000 into 100. Anybody with the percentage?
25.
25.
25%. Correct. Percentage change 25%. Okay. We have completed owner's funds. The next is borrowed funds. So write down capital B, borrowed funds. Any loan taken, okay, that will come under borrowed funds. Here there is loan. If you have a look, loan, just look carefully. Shows the amount given is misprinted there a little. One line below they have printed. Okay, so loan is 34 and 51. Let's write that in our statement. For 2018, 34 and 2019, 51. Keep a rough sheet at the side and immediately do this calculation. Firstly, tell me the change that is occurred in terms of amount.
$7,000.
17,000.
17,000 is correct. 51 minus 34. That is 17,000, correct? And now time to calculate a percentage. Divide by the previous year, that is 34 into 100. Slowly you will realize whatever is that absolute change, okay, that you take and divide by the previous year, you will get the change in percentage. So 17 divided by 34 into 100.
50%.
That is 50%. Is everybody getting the same answer? Please do that and check on your own. Okay, let's move forward. Your liability side, that is sources of funds, is over. Take the total and call it total funds available. Total funds available. Take the total in all columns. Firstly, 2018. What is the total? $84.88. Anybody with 2018 column total?
One lakh 18,000.
1,18,000. Take 2019 total.
1,53,000.
1,53,000. Absolute change also you can take the total. Only the last column, don't take the total there. Absolute change, how much?
35,000.
35,000. Now, if you want to calculate what is the percentage change, don't add up and write what is the percentage is written there. Okay, you have to calculate as usual whatever is current year minus previous year divided by previous year. So basically directly you can do absolute change divided by the previous year. 35 divided by 1,18,000 into 100. Calculate and tell me how much percentage that is. To find out percentage change, current year minus previous year divided by previous year into 100, the formula you are using. But current year minus previous year is nothing but that absolute change which you have been doing constantly. So directly you can take 35 divided by 118 into 100. Do it at the side and tell me the answer.
29.66%.
29.66%. Okay, please check everyone. Are you getting the same? 29.66%. Up to 2 digits. If it's coming in points, round off up to 2 digits. 29.66. Okay. Now, sources of funds is over. Remember, one item was left over there, creditors. Creditors is current liability, okay, which will come below current assets on the asset side. So we have left that. We're going to take it later. Now start with your asset side, which is application of funds. Write down Roman number 2 there. Application of funds. And start with the asset side. Look at the question and see what is the first item there. You have fixed assets directly given to you. Okay. So write down under application of funds, fixed assets. Okay. Have a look. 2018, the amount is 1,20,000. 2019, it is 1,50,000. And now time to calculate what is the change. In terms of amount, anybody has got the change? 120 last year, 150 this year. Increase by 30,000. Now to speed up the calculation, students, I told you, hint, it is absolute change divided by previous year. Directly you can do to calculate what is the percentage change. So do that. 30,000 divided by 1,20,000 into 100. Yes, somebody answered. How much?
25%.
25%. That's right. %. Fixed asset over. Next. Directly current assets is there. So remember what you have to write is working capital, which is your current asset minus current liabilities. Working capital, give the heading first, and then below that write current assets. Okay. Copy current assets from the balance sheet there. Current assets in 2018, 28,000. 2019, 27,000. For the first time, if you have a look, asset is decreasing from 28, it has become 27. What is the change? I want to hear the answer. What is the change?
Negative
Minus
1,000.
1,000.
Minus 1,000, and minus sign always indicate by a bracket. So put it in a bracket, 1,000. Minus 1,000, which means your percentage also is going to come in a minus sign. How do you do that? It will be 1,000, which is minus, divided by previous year, that is 28,000, into 100. Calculate and tell me in terms of percentage what is happening.
Minus 3.57%.
Minus 3.57%. Okay. So write 3.57% and put it in a bracket. That indicates minus 3.57. Please check, is everybody getting the same percentage? 3.57. Now, current assets minus current liabilities is called working capital. So write down here, minus current liabilities. Current liabilities, there is only one item, that is creditors. I'll write it here in the bracket. Creditors. Copy. 30,000 for 2018 and 24,000 in 2019. This
Minus
also,
6,000.
yes, is decreasing. Minus 6,000, put it in a bracket, right? 6,000, put it in a bracket. Percentage also is going to be minus. That will be minus 6,000 divided by 30,000 into 100. Is it 20%?
Yes, sir.
Yeah.
Yes, sir.
But right, minus 20%. So 20% and put it in a bracket. That's it. You have finished even the asset side. You are going to add up and write total funds applied. Total funds applied. Be very careful, students. Current asset minus current liability it is. So if you take the 2018 column, 1,20,000 plus 28,000 and minus 30,000 current liability, you have to deduct from that side. Don't add up all the three figures. The top two figures are plus and current liabilities you have to minus. So do that. 120 plus 28 minus 30,000. What is the answer?
1,18,000.
Of course, it has to match. Your assets and liabilities should be equal. So 1,18,000 was the liability side total, 1,18,000 asset side total. But check and see whether it is matching. Do the same for 2019 column.
150,000.
150 plus 27 minus 24 gives you 1,53,000. What about the absolute change column?
23,000.
I knew. Anybody can give me the correct answer. Okay, little maths is required here. Pay attention. How will you take the total of the absolute change column, the third column? 30,000. Okay. You have to add current asset. So plus, but current asset is negative here, minus 1,000. Okay. And current liabilities have to be minus. So minus 6,000. You have to take into consideration what 30,000 has to be added, 1,000 has to be added, and 6,000 has to be minused. Okay, so that's what I've done. Your fixed asset plus current asset and minus current liabilities. So if you solve it further, it will be 30,000. Then plus into minus, that is minus 1,000, and minus into minus, that is plus 6,000. So if you add up, that also amounts to, is it 35,000? It has to match your assets and liabilities. The amounts have to be the same. So be very careful. See what is done there. Slightly tricky because there was little maths involved here. That minus into minus became plus. Okay. So if you see current liabilities, if you focus on that, current liabilities have to be minused, and it already has a minus sign, minus 6,000. So minus into minus, that became plus 6,000. Another hint is, I told you, assets and liabilities, the value should be same. The way you got the same in 2018 column, 2019 column should be the same even in absolute change column, and will be the same even in the percentage change column. The answer will be the same, that is 29.66%. This is comparative financial statement, out of which we have prepared only the first, that is comparative balance sheet. Okay, is going to take time to get used to this, especially calculating that percentage. And this item, current asset minus current liabilities, is one item where calculation tends to go wrong because of basic mathematics. Plus into minus, minus into minus, what it results into, that should not confuse you. And I told you there is a hint. Whatever you get total funds available should match with total funds applied. Okay, that answer remains the same. Then calculate accordingly and get the results. What you have done is prepared comparative balance sheet, and you come to know what has happened in the year. Okay, current year versus the previous year, what change occurred, that you have written in the third column. But if you want in answer in percentage, for that you have prepared one extra column. Remember, you have used the formula current year minus previous year. This gives you the change. But if you want in terms of percentage, divide by previous year into 100. I told you one thing, change upon initial. Remember that. And even if you don't remember this formula, it's fine. So that was about balance sheet. Same way, we are also going to be preparing the income statement, that is profit and loss account, along with trading account in the vertical format, and also compare the results. What is the change in terms of amount and what is the change in terms of percentage?